Welcome to TradeTheNBI.com. This is Isabella. This video report is for Wednesday, March 25th, and here's Bubble.
Which is the Italian word for dad. Thank you for that, Isabella. Well, record day, this just so strikingly matches what happened during the crash in 29. We could see the buy developing. The Fed promised they were going to intervene unlimited. We knew that in advance off of the low. I showed that I went long on that setup. We have rising gold below the 23%. That's rarely good. And we already are starting to see the potential of positive extreme there. But you created enough short covering in that gives you a little bit of impetus. But again, that 2505, where the high was already at 2500. It's not going to be easy to get past that. Where did we actually? Yeah, right at the 98, just shy of it. Still, there's going to be some more bullish implications for this because we've already crossed from the daily here over cyan. Shorts have covered a lot, which makes sense that a lot of people would at this particular point. The dynamic of the Fed combined with the expectation that a deal would be reached with Congress, the market trades ahead of the news, not after the news. So despite everyone hearing the failures and everything, they knew that there was no question this was going to happen. And so it was just a matter of waiting for it. Plus, the market is also going to take into account if the therapy that the president was suggesting and the trial that began in New York, if it's successful, you have everything you need to end the quarantines because a treatment means you won't have hospitals inundated, which is it's never been an issue for trying to find a cure right off the bat. It was about the inability for hospitals to handle an overwhelming nature of the small percentage of people that would contract this, that would end up in the hospitals needing ventilation. Now, when I say small percentage, fine, you're talking, 10 to 15% of the people, need to go to the hospital. That's a lot when you start looking at the numbers. And everyone, when we were talking, and everyone thought it was ridiculous when there was only, 14, 15,000 cases in a country of 300 million. But you've seen exponentially how we've gone from that. If you look at the websites of the infection, this is the same tracking that happened here in Italy, where the exponential growth is staggering and it overwhelms hospitals in those areas very quickly. New York, you can see, is just inundated, and they're reaching a breaking point really fast, and that's going to continue to spread. With that being said, if you have a treatment that can keep people out of the ICUs, then you have the ability for people to resume normal life, because at that point you can give the medications and within a week that most people will be better, and that will limit the amount of hospitalizations that are overwhelming the system. So cross your fingers on that, because if it is successful, then that would be a game changer for this and completely change the profile of it dramatically. So we'll see how it plays out. The market will be ahead of it, as will we. Now, we know this is coming off a no DOC reset, but above the 13.5 range up here, it's still bullish. As soon as it comes back down, and if we see a resurgence of shorts, then that will be the cue to move lower. We'll see it first on the 50 and 5Ks. NQ much stronger than it had been from before, because the buy signal came in even earlier from the NQ and confirmed itself dramatically right there. Now, we're also seeing a positive extreme in the development of that, and that's just because it's ahead of the S&P, so you may see a little bit of weakness out of the NASDAQ relative to the S&P, but you do have a broader selection in the S&P away from tech, which can operate online, which obviously is going to continue to be able to function a little bit better. The problem they're going to have is when other businesses are unable out to advertise and things like that, it puts a strain on them. And of course, we talked about it, central banks, we knew that the U.S. Fed was going to jump in and support the euro because it helps the U.S. Now, right now, with exports being what they are, there's problems because, as we see here in Italy, they're starting to close the supermarkets because they don't have the stock. This was the supply chain issue that I mentioned would develop over time, and that time is starting to take place here in Italy. Will it lead to major food shortages? We don't know yet. This happened just yesterday as they announced that they were going to start closing for up to 5 days out of a week, simply because they don't have the stock to replenish. So they're having to get it from much further away, which takes longer. And given the limited networks that are operating with the world shutting down for the most part, just trying to contain the exponential growth rate. That's all that they're really working for. From an oil standpoint, we should start to see some improvement there shortly now, because it takes a little while, but the U.S. should be getting ready to start buying up that supply, and that will have a definite impact. From a gold standpoint, of course, all of this monetary flush, while negative, you're seeing a huge difference in what I talked about, where a lot of traders had to sell gold positions in order to cover margins, and that from margin to equity positions. But you also now are seeing physical gold outstripping from a demand standpoint where the spot prices were, so that had to correlate and rebalance itself. Now, when the panic of buying physical gold wears down a little bit, the only other factor you have is that all the refineries as well as producers have shut down. So the supply there is it right now, and that actually puts an upward pressure on it, which is a little artificial in relation to justification for need. But that's the kind of thing that happens. As we're looking at it this morning, good rollout here. We had quite a few areas of near positive extremes. Those tend to get filled as well. We were talking about why this as a plus 15, that we would normally be saying, hey, we normally don't like those kind of short signals. But in this particular case, a little bit different here. We had this beautiful rise of the gold. It was just gorgeous, but it started to level off right as we were getting a major decline in the shakeout yellow below. And even if you wanted to wait for the magenta bar, which is waiting literally for that gold to cross below, you immediately dip below the red line, which was a good sign because you had the steel reset here, which would be a concern. But normally that would create an updraft, but with this dip below the red line, you can see a significant amount of distribution within that overall move. Now, is this likely to be an ABC 50% move? A little too early to say. We're reaching this point of negative 22 range here, and that range is between negative 22 negative 24. When you get there, you usually get a turnaround bounce. The fact that we've now moved below the 50% is critical, because that will become the resistance going forward here. And all in all, that was pretty good. Now, from an intraday standpoint, there was not a whole lot to be concerned about until the end of the day, because it was just straight up. And so when we scroll back through the day, leaving it a little bit broad. Oh, you know what? I think I wanted to mention about that P2 that happened right here with the yellow. So you get this nice, what appears to be a fairly decent buy configuration on a P2. Yellow candle comes in. Everything's looking fairly strong within that. It kind of immediately spiders on this, and this was coming off of what was sort of just a flat shakeout that just barely began to tip up. You can see over here the much stronger signal with the P3X going through here, and also the shakeout moving to positive. Now with the positive extreme, I would certainly be looking for that low to be retested around the 23% right over here. But it depends on your time frame. Again, if you're scalping that one pretty quick, you had a huge move that happened right away, and then it sort of faded back as it filled back in the positive extreme and closed literally right on where that relative low area was, and that created a buildup, and then you ended up with the other P3, X2. These are the ones that I'm working at for functions, the X2s, and that, because what they do is they add the additional conditions in there. It's not enough to just have a pivot in most cases. What I would look for in these is that you're going to get these sometimes where a signal will come in like this, and there's just nothing you can do. That's why it stayed green through this, because it considered the overall range of buy, and the low stop that it had would have been slightly below where the low ended up being, just because of the volatility of the ATR that we're currently residing in is quite high. And so that adds to the stop, which is uncomfortable for some people, but you have to adapt to it because the market works off of deviations, standard deviations and that, and you're going to get those kind of situations. Now, when you don't have, in this particular case, still fairly close to a DOC steel reset that came in over here, popped up but couldn't sustain itself as well and began to roll over pretty quick off that, even from a shakeout standpoint, and led to the new lows going in there. Orange candle came through for the buy setup there. It was all very clean, just following the pink colors going through. And interestingly enough, from the earlier dip below the red line that hadn't been satisfied, we end up getting it filled later on, and that's an interesting aspect that happens with them, because sometimes when it doesn't happen early, you just have to wait for it, and then when you do get the broader sell signals, it tends to accentuate itself, and it becomes pretty clear. But, you know, even after a move like that, expecting anywhere from a 30 to 50% retrace within the overall setup, it's possible. You'll see some of these still, I don't have the GAM function running underneath here because I was running a lot of these function programs trying to get them finalized, so that, because it'll make things so easy to create secondary conditions when we get some of these colored candles, particularly in the orange. There's a big difference between an orange candle that comes with no DOC steel reset and one that's coming right after a DOC steel reset. So, you know, that extra 15 bars of no steel dipping back below tends to have a more softening effect on the power of upswings, and so you want to look for additional support coming from shakeout, either moving towards positive in that. It's still an effective signal. It just means you're going to take a little bit of heat with them, and usually when you do get significant crossover sell signals with dramatic moves, you know that it's just about ended. You know, when you've got that steel significant cross below here, the green's are already below. When the cyan sort of just the steel kind of flattens out, that's still, you know, if you were long, you could be like, okay, I'm going to, you know, clear out of that, and then you'd be like, oh no, it's going the opposite direction on me, and that'll happen a lot with longs. This is where seeing that rollover of the red DOC really helps from that standpoint, or, as I like to say, using that ABM as that crossover tool. That way you're not shorting into just what is a slow rise of overall bullishness, because it just overwhelms the shorts. So we'll go back to our current chart as we're looking at it right here. And so now, with short-term buyers having used themselves up completely for this run, it's really going to be a requirement of midterm and long-term buyers here to turn it around. Now, what I look for, if you know, some people say, I missed the run. Well, as soon as this orange spikes back up, I would expect another run lower, and that's the opportunity to either add in or enter a position if you missed the beginning of it, because when you get this kind of decline, this orange can continue to go straight down all the way, and that would then spark the potential for new buy setup. Not there yet, because it's between the cyan and red. It's continuation, and right now that's continuation in the direction that we're going. So that's where we're at now. As always, though, I will keep you updated as best I can. I'm going to continue to work on those functions to get them out to you, and certainly answer any of the questions. I know we had a couple of really good ones on the Skype chat that were on there about unique positions and the difference between where the magenta candle pops in sometimes versus where an actual DOC spread is, and how you can treat that. And this was like a good example as it just started to flatten out and the dip down below. And like I said, again, even if you waited, I prefer trying to capture my shorts between the 76 and 100%, definitely. And if you can, if the ABM is caught between that, even better. When you get this kind of a spread between the 100% and 76%, more than an ATR, it's a pretty good likelihood that you're at least going to get a move back down towards the 76. So capturing it any time earlier than that certainly gives an extra breath of room to allow it to either gravitate in your direction or move back and forth. So those are some just practical trading aspect items. As always, trade well. We'll talk to you later.